Welcome to the Deep Dive. Today we're jumping into something foundational yet surprisingly dynamic. Printed circuit boards, PCBs. You might think it's a stable industry, but right now. It's this fascinating mix of strong growth signals, some confusing trends, definitely soaring freight costs, and you just can't ignore the geopolitical pressures pulling things around. So for you, our listener, our mission today is to really unpack the key takeaways from a pretty comprehensive report. It's the Global PCB Report Industry Insights Q1 2025 from IK Group. We're aiming to pull out the most critical bits of insight, the strategic nuggets from this very fresh data, basically give you a shortcut to understanding where this vital global market is right now and where it might be heading.
Yeah, and it's so important because, PCBs are quite literally the backbone of almost all modern electronics. Think about it, the phone you're holding, the servers running AI, medical devices, everything. So understanding the forces shaping this market, especially with this early 2025 snapshot, tells us a lot about the bigger picture, global economic trends, major tech shifts. It really impacts almost everyone.
Okay, so let's dive right in. The report suggests the global PCB market is, quote, poised for continued growth in 2025. This comes after, a dip in 2023 and a bit of a recovery last year. So what does this growth actually look like? What are the numbers telling us?
Well, looking at the bigger picture, the overall forecast for 2025 is pretty positive, actually. They're projecting growth of about 6.8% in value and 7% in volume compared to 2024. And looking even further out, the compound annual growth rate, the CAGR from 2024 up to 2029, is pegged at around 5.2%. That pushes the market towards, an estimated $82.6 billion? But,
Right.
and this is the interesting part, despite that generally positive outlook, the immediate picture for Q1 2025 specifically, it was a bit different.
Right, that's exactly what jumped out at me too. The report shows this PCB revenue increase of 8.7% year over year for Q1 2025, which sounds great.
Sounds fantastic, yeah.
But then the same quarter, there was a minus 5.8% decrease quarter over quarter. So how do we square that? What does that mean for the immediate future?
It's a classic case of looking beyond the headline, I think. What this suggests, and what the forecasts seem to back up, is that the Q1 dip was likely temporary. Maybe inventory adjustments, maybe just a market pause. Because look at the projections for the rest of the year. Q2 forecasts up 2.8% quarter over quarter, Q3 jumps a significant 10.8%, and Q4 up another 1.4%. So it points towards a rebound, not a sustained downturn. And this kind of aligns with the broader global GDP growth forecast too, around 3.3% globally for 2025, with developing economies actually pulling ahead a bit at 4.2%, it suggests resilience.
Okay, that context helps.
Yeah.
So if we're expecting this recovery and a longer-term growth, what's really fueling it? The report seems to point a big finger directly at AI, artificial intelligence.
Oh, absolutely. Unequivocally. The report states it pretty clearly. AI infrastructure remains the dominant force shaping the industry. It's driving just exponential demand for high-performance computing, for data centers. And it's not just more PCBs, it's changing the type of PCBs needed. For instance, high-density interconnect PCBs, HDI. Demand for those is skyrocketing. They're essential for these powerful AI chips, letting you pack more complex circuits into smaller spaces. Exactly what AI servers and high-speed networks need.
That's a huge shift, isn't it? Because historically, HDI was all about mobile phones.
Exactly.
But the report notes mobiles now use only 46% of HDI boards, down from 61% back in 2015. And servers, data storage, they've jumped from just 3.4% to 10.5% in that same time frame. That's a major reprioritization.
It really is. It shows a fundamental market shift. It's not just a cyclical trend, it's structural. And the forecast for 2025 versus 24 also highlights what they call an 18-plus layer surge. So more complex boards, again, driven by things like AI servers, but also advanced automotive systems, high-speed optical modules. Connect that to the overall electronics market, which is also forecast for a healthy 7.4% sales revenue bump in 2025. And you see this clear move towards more specialized high-performance applications rather than just standard consumer stuff.
Okay, AI is clearly the big engine. But beyond AI, what other sectors are showing really significant growth according to this report?
Well, the data on top electronic industries growth comparing 2024 to the 2025 forecast is pretty revealing. Military and aerospace projected growth of 36.1%.
Wow, 36%.
Yeah, it's massive, really stands out. Server and data storage, as we discussed, still strong at 6.0%. Automotive, It's showing only modest recovery signs, about 1.9% growth over 2024. Seems it's still dealing with the EV transition complexities and, frankly, strong competition from Chinese OEMs. But military and also industrial electronics, they're both expected to gain about 6% versus 2024 and maintain a 6% compound growth rate through 2029. And the report explicitly links this to, quote, rising geopolitical tensions and increased global rearmament efforts. So demand drivers are getting more complex.
That makes sense. Given these shifts in demand, especially towards things like military and high-end servers, where are these PCBs actually being made? Are we seeing changes in the global manufacturing landscape?
Yes, definitely. There's a very clear trend described as out-of-China growth. If you look at the 2025 year-over-year production growth forecasts, Asia, excluding Japan and China, is leading the pack at plus 8.8%. Japan's forecast is plus 5.4%. And the Americas are at plus 4.0%. So it really suggests a strategic move, maybe an acceleration, towards diversifying the manufacturing footprint, building resilience outside traditional hubs.
And the costs. With all this happening, shifting demand, shifting production, are raw material prices, like copper, staying stable?
Stable is definitely not the word. The report highlights copper foil prices going up, a significant 11.5% increase year over year. Now, laminate prices, specifically looking at 1.5 millimeter copper foil priced in Chinese yuan, they actually saw a noticeable drop, 14.1% between May 2024 and February 2025.
Okay, so some relief there.
Well, sort of, but even with that drop, they were still slightly up, 1.7% year over year. So you might get these short-term dips in specific components, but the overall pressure on key raw materials seems to be upwards, which obviously impacts the final cost.
And with volatile material costs and shifting production, what does that do to lead times? That's always such a critical piece of the puzzle for the supply chain.
Yeah, and what's quite striking here is the surge in laminate lead time. It went up by 13.8% between March 2024 and March 2025. So the average wait went from about 8 days to 9.1 days.
Almost a day and a half longer on average?
Exactly. Now, there was a tiny decrease quarter over quarter in Q1 2025. It went from 8.1 days down to 8 days. But the report expects this longer lead time to stabilize, quote, not subside in Q2 2025. So that tightness in the supply chain, it seems persistent. Planning ahead is still absolutely crucial.
Right. The report's summary really paints this picture of complexity, doesn't it? Mixed trends, soaring freight costs, and geopolitical tensions impacting the industry. It sounds like a tangled web. Let's try and untangle it a bit. How is trade policy specifically impacting things right now?
It's having a huge direct impact. It's not abstract at all. The report mentions things like former President Trump's potential 25% tariff talk shaking up global crude flows even before anything happened. And then actual new U.S. tariffs on Chinese goods, shifts in e-commerce rules. They've genuinely disrupted trade flows. There was a 10% U.S. tariff that took effect February 4th, for example. And the report notes that businesses were literally rushed shipments to get ahead of these tariffs. So it changes behavior, it changes costs, it redraws supply lines.
Okay, so those policy decisions directly affect the movement of goods. What about the cost and efficiency of that movement, the logistics side? How's ocean freight looking?
Well, ocean freight, according to the Global Baltic Index, actually showed significant, quote, weakness. Rates dropped quite a bit, 24.1% year over year, 24.6% month over month.
Oh, cheaper shipping.
On the surface, yes, but it's complicated. There's still major port congestion, especially in Europe. About 8.4% of the global fleet was tied up, and ships aren't really going back through the Suez Canal yet, so routes are longer. Plus, there's this looming concern about overcapacity because a record number of new ships were ordered, 8.4 million TEUs worth. So rates might be down partly because there are just too many ships, but the underlying system still has these efficiency problems.
Air cargo, is it following the same pattern or doing something different?
Air cargo is showing, as the report puts it, mixed trends. Global spot rates were actually still 17% higher year over year.
Higher, why?
Mainly driven by strong e-commerce demand and just tight capacity, even though overall capacity was actually up 6.8% year over year. That capacity growth still didn't quite keep pace with demand, which grew 4% in February 2024. Interestingly, the Europe-North America route saw rates jump 9.7% year over year, likely because people were shipping early, maybe trying to beat potential U.S. tariffs.
That connection again.
Exactly, but China-North America rates actually fell below $5 per kilogram, so you see regional differences depending on specific pressures.
Okay, and finally, with all these trade tensions, logistical snarls, How are the wider commodity and currency markets reacting? It feels like they must be pretty jittery.
They absolutely are, and the report highlights some direct impacts. Gold, for instance, climbed towards $3,051 an ounce. That's classic safe haven buying amid trade war worries, especially after the U.S. imposed those big auto tariffs. Investors get nervous, they buy gold.
Right.
Copper also, quote, jumped past $5.18 per pound. That's over $10,400 a ton. Again, linked to the prospect of accelerated import tariffs fueling speculation. Currencies reacted too. The Chinese yuan actually soared against the dollar, strengthening to 7.28 RMB per dollar. That's a 16.3% year-over-year jump.
Why would it strengthen with tariffs?
Well, it seems the U.S. dollar weakened on fears of its own economic slowdown and the broader trade tensions, which relatively strengthened the yuan. The euro also gained against the weaker dollar, nearing $1.08, especially with talk of EU retaliation to U.S. auto tariffs. And even crude oil climbed back up, hitting nearly $70 a barrel in late March, partly because U.S. inventories fell sharply, signaling strong demand alongside those global supply concerns. It's all interconnected.
Wow. This deep dive really has illustrated that intricate dance, hasn't it, between the tech itself, the economics, the geopolitics. We've got this PCB market set for growth, massively influenced by AI, but at the same time, it's trying to navigate these choppy waters of tariffs, fluctuating costs, complex logistics.
It really has. And what's fascinating, as you said, is just how interconnected it all is. You see AI demand surging, which changes the specs for PCBs, which impacts material demand. And then a trade policy decision somewhere else ripples through and changes the cost of those materials or the route they take to the factory. Every piece really does influence the whole system.
So for you, the listener, trying to make sense of a world that relies so heavily on these invisible technologies, what's the big takeaway here? I think it really reinforces that innovation doesn't happen in isolation, does it?
Yeah.
Global events, policy choices, they have incredibly tangible, immediate effects on industries, right down to the components level.
Absolutely. And maybe the final thought, the question it leaves us with is this. As AI keeps accelerating and geopolitical tensions seem unlikely to just disappear, how is this delicate balance between supply, demand, global policy, how is it going to reshape not just the PCB industry, but maybe the fundamental nature of how we make technology in the coming years? What unforeseen challenges or perhaps even unforeseen innovations or new markets might bubble up from this really volatile but clearly very dynamic environment?